Itome, thank you for joining us today. How would you describe market reaction to the earnings that we've had this week, particularly Ecobank earnings, group revenue up 9% in 2020?
Okay, so I'll describe it as somewhat positive. On a general basis, what we've seen is a lot of investors have reacted, positively to some earnings. The banking space, what we saw, last week GT released. Also, this week we've seen results from Stanbic IBTC, Ecobank, and the likes, and we've seen that impact activities in that space. I think Stanbic IBTC closed the week on a positive note, even on a week-on-week basis, looking at the gains. Same Ecobank as well. We saw them react, positive. We saw a slight gain today in their stock prices, and also I think in addition to what we've seen play out for the banks, the earnings releases from Dangote Cement as well boosted sentiment in the market, not just Dangote Cement, Wako and the like. So we saw a lot of activities in that space, and I think on a week-on-week basis, the market generally gained by 2.2%. So I think investors, looked at earnings and then took positions and stocks that really, met up with expectation or exceeded expectations.
Talk to us about your earnings for outlook for bank earnings going forward, perhaps starting first and second quarter. We know that we're still in a soft recovery, but then even in 2020, from the numbers weren't too bad, and even though we're in a recovery, would you say that investors are still optimistic, given the numbers from 2020, that the banks will do pretty well in this quarter, in the first few quarters of the year?
Well, I think judging from last year's performance, where due to the despite the macroeconomic headwinds we had, we still saw some banks, report somewhat positive result. The likes of GT, Zenith Bank, Stanbic IBTC, although bulk of their gains or bulk of the driver for their results stemmed from their non-interest revenue aspect. That's largely due to FX revaluation gain. We saw that play out. We saw that impact banks' numbers positively for full year 2020. Now going into 2021, at least for the first few quarters, I think that I expect to see some sort of rebound, yes, in the banking space. To begin with, for interest income aspect, what I think is the slight recovery we've begun seeing in yields, especially in the fixed income market. We think that would, impact banks' profitability on a positive level. We think, just on Wednesday, we saw how yields at the fixed income market in the primary auction we saw for bonds, we saw how yields increased by 23 basis points to 11.23%. Same with Treasury bill yields. At the last auction last week, we saw yields, appreciate. So we think that this would, bode well for banks. Also, with the recovery we have in the economy, we expect to see some level of growth in loans. For the first few quarters of the year. In addition to this, non-interest income, which was a major player for banks, a major driver for banks' earnings in full year 2020 results. We think that this year we should see some positive outcome for that particular line item, and our basis is looking at FX currently. We've seen that FX rates are somewhat depreciated. As of Q4 2020, we had FX trading at 369 naira to a dollar, and now we have it trading at 490, 410 naira per dollar. So we think that this gives banks room to, book more revaluation gains, at least in the first few quarters. And coupled with the fact that the CBN's policy last year, to September last year, precisely to reduce the minimum interest rate on savings deposit, we think that would bode well for funding costs. In the first few quarters of this year, so we think that should impact banks positively. So for us, we think this year mostly would be some level of rebound for the banking sector.
Okay, now back to the broader market. We're gradually coming to the end of trading for the month of March and for the first quarter. Who would you say have been the biggest winners so far this month? And second question, for the portfolio managers who probably will be taking a second look at their portfolio as they try to rebalance for the new quarter, what kind of rejig are you expecting to see?
Okay, so on a monthly basis, so far in this month in March, I think that the major winners would be those in the banking space. We've seen that the banking sector precisely has gained close a double-digit number. That's looking at the index on the banking space. We've seen that improve on a double-digit basis. So I think that those are the likely winners we have. Also, we've also seen the cement sector, gain. So I think that those are like the big gains for this month.
What is your forecast for trading in the new week? We're seeing the market back in negative territory, but it would appear that investor appetite is still considerably healthy at the moment.
Going into the forthcoming week, I think that not all companies have released the results, so we still expect to see some earnings report from a few companies. So we think that should be a major driver. And then for those stocks that have significantly gained, we should likely see some profit taking by investors. Trying to we should just likely see positive takings from investors basically. So go in the next week and forthcoming week, what we think is first earnings results. From companies would drive that and would drive activities as well as profit taking.
Now, on a macro level, what would you say are the biggest concerns for investors? We're seeing a continuous rise in inflation. Some analysts are projecting the high end of 19% this year, GDP growth under 2% on the year, and so many other macro factors. I'm just wondering, for investors, what would they be keeping their eyes on?
Yeah, like you mentioned, the rates are really, the inflation rate is really bad. We've seen, we've had negative return on the fixed income space for a long period of time, and gradual recovery in fixed income yields should, somewhat reduce the negative returns on that leg. And also, and I think investors are also concerned about the FX market, and looking at the fact, I mentioned earlier that the FX rate has somewhat depreciated between Q4 2020 and Q1 2021. So these are concerns that we see investors having, especially in peculiar to the Nigeria's market. But what we think is gradual recovery in the economy. As things begin to recover, we should see some sort of positive sentiment from investors, basically.
Well, finally, we have about 60 seconds left. What stocks do you like at the moment? What stocks are on your radar, and what are those fundamentals that are supporting them?
Okay, so stocks on my radar would include, for the banks, it will include GT Bank and Zenith Bank, GT, Zenith Bank, and even UBA, Access Bank as well. And then for the cement sector, it would be the Danksem and Warco. For the banks I mentioned, it's largely based on the reasons I gave earlier. I expect to see some recovery in their profitability this year, and also I think that would drive their earnings overall. And in terms of for the cement sector, as the economy goes into recovery space, we expect to see much more activity in the cement sector, and that should overall impact earnings there. And so these are the stocks I'm really looking at.